And for more analysis, we've got MarketWatch markets editor Bill Watts joining us. Bill, thanks so much for being here. First off, I want to ask, we know that China is retaliating. How are the rest of the global markets reacting to all of this?
Yeah, the markets didn't like the China retaliation, so we have seen markets falling again here this morning. We have U.S. stock index futures are pointing to another pretty ugly start to the market. Today we have Dow futures down over 1,000 points. So the fear here has been that we would see retaliation and an escalation of the trade war, and I think the China news this morning kind of reinforces those concerns, and that's what people are waiting for to see. If we see more of that sort of reaction from trading partners.
And it seems to me that countries can either negotiate or retaliate. How do you expect other countries to adjust their strategies and respond to the White House here?
Well, I imagine there's going to be a combination of things here, but there is certainly an impetus to retaliate. We've seen Canada respond with 25% tariffs on U.S. cars, U.S. made cars. So we've seen that. We're waiting for Europe to see what they do. There's a meeting of European trade ministers coming up early next week where we'll see how they respond. I think there's a concern that they could target U.S. Services in businesses, digital duties, other things like that, where you do have a trade surplus in services with the European Union. And I think that, and with a lot of other countries as well. So I think there's a concern that those sorts of things could be targeted, and that would mark an escalation that would probably also not be well received by the market.
Now, Bill, something else we're watching, the March jobs report will be released later this morning. What can we expect from that?
Yeah, so it's expected to show that hiring slowed somewhat in March. I think we're looking for a figure of around 140,000 non-farm payrolls. But I think the risks for the market around that are a little bit asymmetrical. The data, if it's good data, if it's solid, people are likely to dismiss it as old news. This is data that came before the tariff announcements. Probably reflects some of the rehiring after some of the DOGE cuts and to the federal government jobs and things like that. And if it's a bad number, it's going to reinforce those fears that the economy was beginning to feel some effects from just fears around the potential tariff measures beforehand. So that's sort of the setup there for the jobs report. People may look past it.
Well, a lot to keep track of. Bill Watts, thanks for joining us. We appreciate it.